welcome to another Coffee with Samso, where we speak with ASX companies and the guys who run the show. Today we've got Barry Cahill here from Cyprium Metals, who has the Nifty Copper project. They've just released a restart study, which for all shareholders and potential investors has been something that been waiting for. So Barry, I've got Barry here. Welcome back, Barry.
Thank you.
Look, the restart study, everyone's been waiting for it. Give us the lowdown.
Good. It's good like we thought. No, so before I start talking about the restart study, I'd just like to explain to listeners about the resource and the reserve, because in the cautionary statement we talk about why we haven't declared a reserve. So I'd just like to talk a bit about that, and then I can talk about the restart study. So what's happened is we've got the resource, which we've got a pit design on, and we've done the pit design for phase one on the oxide. We've done all the work to make it a reserve, so all the costings, we've removed the inferred, only done measured and indicated and all those sorts of things. But then it's meshed together financially, economically, with a heap leach retreat, which is quite a substantial amount of material, where we can't declare a reserve. So because we've meshed a reserve with a non-reserve, we actually can't declare either. So that's just part of the cautionary statement that people can look at, but I declare that first. Yeah, so because you mesh an economic reserve, if you like, with a economic non-reserve, you can't declare the reserve. So just so people are clear on that, and the listeners clear on that, it's done as a reserve, but we just haven't declared it. And the restart study is about restarting, which includes the heap leach retreat and the open pit oxide phase one. The results of the study, which again you can read, so moving on to it, are very, very good. We're talking about a phase one study that deals with about 10% of the mineral resource, goes for 6.3 years, about 146,000 tonne of copper, free cash flow 544 million, and that's calculated at US dollars 9,075 cents, whereas today, of course, the copper price is over 10,000 and the AUD USD rate's about 0.73. So there's that leverage against that. C1 costs, which are net direct operating costs, are $1.91 a pound, and the C3 costs, which is similar but not quite the same as all-in sustaining, but all the costs in, it goes at about $2.82 a pound. So yeah, really, really good result. Pre-production capital from now is 149 million. Cash drawdown about 193 million, so about a 200 million drawdown, which is the financeable amount. So what the steps we do now is we'll finance that amount of money in the next little period of time, and then we'll go and build it, which is the exciting bit. So we're pretty happy. It's been a bit slow, and apologies to shareholders, but these things do take time, and we've worked on it until we've got it pretty well right. So we're pretty happy with the result, but it's out there now. Now we move on to finance, and then we'll build.
So the cost at 282 a pound, I think in terms of pounds, the spot price is about 4 something, isn't it?
450, 460.
Yeah, so there's a fair fat margin.
Oh yeah, yeah, it's a really, really good margin, and that's something we've noticed, which has been intriguing for me, is that as the costs are going up, because as you know in WA we're under some pretty intense cost pressure, not least of all from energy pricing, because of what's going on in the world at the moment, increase in labour costs because of labour shortages, and then increase in freight, particularly on the reagent side. It's been quite expensive. What we've seen is as those costs have gone up, the copper price has gone up as well, and the margins remained the same. That's been the most really good thing about it, is that the margin of 80 to 100 million cash per annum on this phase one pit has remained the same. So that margin, that strong margin, has remained right the way through. Because if you remember, when we started out, we're looking at like $1.50 for our operating cost against a $3 copper price, whereas now we're looking at sort of that $2 and $3 mark for all-in sustaining at a $4, $4.50 copper price. So that margin has remained the same, which has been really, really good.
Okay, so in terms of, you got 1.2 million tonnes of copper, that's in total.
Yep.
of everything. Phase one, you're looking at producing 146,000 tonnes of copper plate.
Yep.
Phase one, 6.3 years life of mine. If you were to look at all the other different phases that you would, let's make the assumption that all goes well and you're moving down the track.
Yep.
What kind of mine life could we be expecting?
So the total resource position is 700,000 tonnes at Nifty by itself, and we are consuming 70,000 tonne of that in this study, so a 10% of it. So when we look at the sulphide, which is the big pit underneath, we're looking at a 20 plus year life. It's again something like we said, as I said about margin's maintained, but life's been maintained as well, like we said in the early days of this, that this thing would go for plus 20 years. It's certainly, I won't say it's 100%, but it's pretty positively going to do that on that sulphide zone. And the advantage of the sulphide zone, of course, is that we've still got the concentrator sitting there, so we can concentrate it, or we do our metallurgy, which is what we're doing right now, and we can heap leach it. So we've got these opportunities for it, and you only follow one path or the other for commercial reasons to make more money, obviously. So there's potential that the whole thing could go longer. Remembering that to the south and the east, it's still, the ore body's still open. It's still open at depth. So who knows what the life could be? And I've made that comment before. We made a release this morning. I don't know if you saw it, but we ended up with an intersection of plus 10 metres at over 2.5%, which is in a zone that hasn't been drilled properly, so we're still getting these marvellous intersections in this ore body that we're mining, so that the opportunity for it expands just huge.
So that's on the western side of the pit, I noticed. Yep. And you had an image of previous drilling in the same area. Yep. and the current drilling. And what I liked about it is the consistency of what you're getting. There's no sort of gaps. You're getting nice depth, 30 plus metres. I think it's 1 point something.
1 point something, yeah. Generally over 1 they've been, the big intersections.
So those are good. That's very encouraging for that structure to be, as you said, to remain open for future users, right? Yeah.
So see, that sort of leads you then into that pit shell. So you've got that pit shell, and that material that you're drilling is already within that pit shell, but before that intersection it would get mined as waste. And now we get an intersection that gets mined as ore, so the pit becomes more profitable because the waste ton becomes an ore ton, and the ore ton goes to the heap leach pad, And again, that's the hidden part of this, and we're going to release a new resource that we think will get bigger in this half. So we're going to see another resource. We're going to see more tonnes of grade in the same pit shape. Hopefully that'll then extend the life of that phase 1 oxide pit. And it's really hard to believe that this ore body that's been mined for so long, that's actually happening. And then it's still open on that. So when you look at the trough on that southern limb, we've got that intersection of the southern limb that's still opening, and it's still open at depth and on that eastern end. Amazing ore body. So who knows what the final resource is going to be?
Because when I was looking at your study, your presentation that you released, I didn't realise after we sort of had this pre-discussion before the recording that you've got one where you've got that blue shell, and then you've got the next page where you've got the grey shell, or the grey part, and then in the middle is all the coloured parts, and that's the oxides that you're doing.
Yeah, so it's
different phases, right?
That's correct. So it's the same pit, and what it's demonstrating is the stages, and then those coloured stages sit over that big grey circle. That's the 20-year life of mine, because we've already started that work, and it's not to a scoping study level yet, which is why we haven't released it to the market. But we can confidently release that like pit shell to show people the potential of it, and you can see it's a huge area. So what's happening now with that? So it's interesting now. What of our priorities? And this is where we're pretty lucky. So priority number 1 is to get the finance. Then priority number 2 is the construction and operational readiness post-finance. And then priority number 3 is the life of mine pit, which is the sulphide metallurgy and that optimisation. So you see, because everything's now happening and we're charging down that path of making copper metal, that priority of getting that done has been pushed backwards a little bit, because we've got six 7, 8 years life on the oxide pit, so we don't need to rush to get that out in the market, even though we want to get it out in the market because the 20-year life's a fantastic thing. But you can see how that priority's been shifted. Still hopeful we'll get something out in the second half of this year on it, some final numbers in a scoping study sort of level, but it really does require the metallurgy to be finished to be able to do that. We should be agglomerating the first sulphide sample today, so hopefully the metallurgy happens pretty quick and we can get some indicators on that. And that's the heap leach metallurgy, by the way, not the concentrator metallurgy, because that's
I think that's a point that I wanted to touch on, because you know, when we first had our first coffee at Samso, you didn't have Nifty, and then an hour before you had Nifty, and it's taken me a while to sort of understand how the fundamentals work for Nifty, because you just explained it to me recently, and it's sort of been clearer. You've got the oxides that sits there, and you've got the sulfides, and you guys are heap leaching the oxides. Correct me if I'm wrong as I go along.
No, that's right.
And then you are now looking at potentially heap leaching the sulfides, but you have a concentrator there that you can turn on and treat. So there's no if they don't treat the sulfides by heap leach, then they can't mine or they can't process the ore. It's just another process, right?
Yep.
And then on top of that, you got the old retreat of where previous guys were doing heap leaching, and they left
0.5%.
half a percent in the dump.
Yep.
Where you guys in the studies talk about recovering 85% of that.
Yep.
So maybe you want to sort of reiterate that in more scientific way of what I've just described, because in some ways it's quite confusing and misleading when before.
Yep.
Now I'm totally clear as crystal, right?
Yeah. So funny is 12 months ago we had this conversation, and here we are, we're restart study finance, about to start build. Well, we've been building already. It's amazing how quickly it's moved. So initially when we started looking at it, so our heap leach intellectual property, if you like, is actually on sulphide heap leach. Oxide heap leach, it's not simple, but it's a bit easier to manage. So the keys to oxide heap leach is more about agglomeration and reagents, where sulphide heap leach is about temperature and air and bugs and acid and other reagents and all sorts of things. So much more complicated and much harder to do, because chalcopyrite, the mineral in the sulphide, is much harder to leach. It leaches but very slowly, so you're trying to steepen the curve. So when you look at Nifty, the heap leach that's been there in the past, there's no chalcopyrite in it, so it's basically an oxide transitional, which is like a malachite, azurite leach, and then chalcocite, coverlite, and funnily enough, we've seen some carolite, would you believe, which is that copper cobalt mineral, but not much, but just a small amount of it. And what happened in the history of that is when they started in the real oxide rather than the transitional, it's like a clay, and it compacted and they lost permeability, so it doesn't leach because the fluid can't get through. And they started with grades of greater than 3% copper, and that's why there's so much copper left. And then over time, so if you look at the heaps go from 1 to 7. Over time, they got better and better and better at it. And in fact, on heap 1, they actually picked it up and retreated it already and put it on top, which we're aware of actually, obviously, and it improved. But because of all sorts of reasons, it never improved to the point that we've got it now, because as you know, technology changes, knowledge changes, and we've now got this mix where we can take effectively, if we have new ore or fresh ore or whatever you want to call it, new ore, let's call it new ore because fresh ore means like sulphide ore, but new ore that is oxide and transitional, we can recover up to about 95% of the copper. So if you look at the historical heap leach, 70% of it on average has already been taken out, which means there's only 30% left, of which you can get around 20 to 25%, which is an 85% recovery. So that's how that part works. And then when we look at the new oxide, we can get 90% plus, even though in this study we put 90%. We can potentially get up to 95, but I don't think we'll get that. I think 90 will be good. There's this two phase. So heap leach retreat we can do because times changed, technology's changed, and you can work on the mistakes that were made in the past. And then because of that, you can get your new ore out of the pit and do a much better job on it. And that's what makes this project fly. Where this project is not as good as it could be is what you've got to remember is in the middle of it, there's this pit that's already been taken out. So imagine Nifty knew if we had all that material that we could mine ourselves at over 3% that was done in the past, it would be like unbelievable. Which again leads me on to the attraction of something like a Maroochydore or a Murchison where it hasn't been mined before. So this is a really robust pit, but the big centre of that ore body where that good grade was has been taken out, and of course the same in the underground. So you're dealing with remnants almost. So even with remnants as an ore body, it's just a fantastic thing, and it's all about the ability to leach that copper mineral out of those heap leaches with the right particle size, the right agglomeration, the right reagent mix.
I mean, the whole Nifty concept in itself, as I said, is big. But how much? Let's go back into the resource. I mean, and we talked about Nifty Wares and all that. How much do you think that's going to keep going? And obviously, as it gets deeper and deeper, you'll be faced with different challenges. Whether it will derail the process or not, I don't know. But how far do you think you guys could go in Nifty, in depth or strike?
Well, the western end current thought is that it terminates, and we did some early sterilisation drilling out to the southwest and didn't get anything. So somewhere between that area and where we are now, it terminates, it finishes. I don't know if it's on a fault or whatever, but we'll find out. To the east and at depth, it doesn't terminate. Currently, the pit goes for 20 years. In 20 years' time, I'll be on a Zimmer frame somewhere, so it won't matter much to me. But by then there's probably robots and all sorts of stuff, and they'll probably go underground again because the ore body's still there. And they'll probably go underground again into the next century almost, because there's nothing to suggest that the copper stops. The grade might be a bit less, but the ore body's not closed off, so it could. Okay. Who knows how far it could go? We haven't drilled a lot of it. The southeast is still open. We still haven't drilled that. We still haven't drilled the south. Who knows? But right now, with what we've got, it's going to see all us into a retirement home the way it is. 20-year life's a long time.
Yeah, especially when you're past 50.
Yeah, it certainly is.
I guess for immediately, I mean, what when we look at this, everything looks rosy. As I said to you, raising 200 million for people in sort of copper nickel industry is a walk in the park. Not to jinx things, but market's buoyant, everything's going well. Well, what could derail this whole process for you? I mean, for the investors sitting there, great story. What could derail this happy moment?
Well, lots of things can derail it. I mean, the current world political system in its own right. Besides that, black swan event. Time is always a big issue in any of these builds. Time and increasing costs, because there's still lots of inflationary pressure as we see. Yeah. And again, that's one of the reasons why we keep hurry up, let's do it fast, because when you're plating copper and making money, those become lesser issues. When you're trying to build something, they're big issues. And if you can't get labour, or you can't get materials, or you can't get delivery of gear, it all goes to time, and time's money, because you've got these overheads and just trying to keep people together to do it. So that really is the keys. In terms of like when you look at the risks in an ore body, the resource reserve's been around for a long time. The ore body's well known. The water in the mine's well known. The geotech, the pit's been standing up for 20 years. We've done a lot of geotech work. There's a subsidence zone there that we have to manage, which is not a big issue in the oxide pit, but in the sulphide pit, there's more of an issue there. But miners have been dealing with subsidence zones in open pits for 100 years, so they're manageable, but risk. Again, on the heap leach is well proven. There's 200,000 tonne of copper been pulled off heap leach, 500,000 tonne of copper been produced on concentrate from the site. So again, that risk is well known, which is why it's a restart study. SXEW technology is reasonably well known. Selling copper metal plate is much easier than concentrate. Not the same margin for the metal trader. So they're all reasonably known, notwithstanding that there's risks about them, but it's certainly much less risk than if you're on a new project. So at all steps of that process you go through in your head about risk, it's been tested or proven, or we've done it before. So mining high risk, high reward anyway. But I think time and these cost pressures are what concerns me. We've taken most of our long lead items up to almost purchase order stage, so we're pretty solid on them. And then the labour once you start to build. But again, the labour's workforce is not huge. It's not $1 billion build. I mean, the overall capital cost is 140 million. It's not huge, you know. And in fact, on that, like we've had people coming through with finance right the way through. They've been in the data room. We've got a few initial term sheet, but we've had a couple of parties because we've said this is what the number's going to be. A couple of parties have walked away because the number's too small. They said, "Oh no, it has to be 300 million, otherwise we're not interested." And we're like, "Righto, we'll take 300 million." But
yeah, I was going to say that. We can make it 300 million.
But almost like too small. But we'll know that in the next little while. We'll know what the final term sheets look like, what the debt finance looks like, and then do the docs and do the drawdown, and we'll go and smack into it and build it.
So, I mean, Barry, you've done this before and you've looked at it, and for a lot of guys who are new to this concept, the Nifty Story, how does it compare to the ones that you know of, or is there a comparable, say, apples and apples, or are we just stone fruit to stone fruit at the moment?
No, they're all different. I mean, the last one we did was everything went in by boat, 16 hours on a boat to get in there, two days travel to get in there. Terrain went from 0 to 700 or 800 metres in under 4 kilometres. So, and we had to cut and fill everything. So, being on a big flat desert, being able to fly in a day is like beautiful. Transport's good. The transport's there. We've got gas power. We've got a 21 meg gas power station. So, we had to put in diesel gensets. So I'm glad we're not on diesel, obviously, because power costs are like that. Whereas long-term gas is a bit more stable. It's got so many advantages. We've done the comms conversion. The conversion was 3G. We've now converted to 4. They're actually putting 4G online this week, would you believe? So we've already sunk that cost.
Okay.
So you can ring home on the mobile, as long as you're on Telstra, but ring home on the mobile. You can fly in and out, and there's other sites if you need to get home quickly. You can fly out of like Woody or Telford. There's some potential shared arrangements. So in terms of location, a lot easier. The difficulty about Nifty, which people at Telford and Woody will tell you, and in the Pilbara is the climate. So the midday temperatures are very hot, particularly working in a heap leach. So the climate's difficult. Access in the wet, which is now, can be difficult. So you have to have more stores there, but the whole thing's set up for more stores, like this big fuel tanks. There's big store areas, so you can take extra capacity. SXEW refurb are good fun, but generally not difficult. Heap leach construction. The heap leach construction is probably a little bit more difficult because of the way we sort of do it in West Australia. It's not the same as what we would do elsewhere. They put these extra sort of controls and that in place that in our view probably not necessary, but it's the standard here. So that makes the build a little bit more difficult with underliners and things like that. But other than that, it's a standard heap leach build, which we've done before. We've done a lot of work on liners, by the way, which a lot of people don't know. We've been dealing with liner manufacturers and our liner supplier and installer about liners, and we've got much better liners than we've ever had in the last 20 years. And these liners are bloody good. The supplier's done work on our particular circumstance and come up with a really good product. So we'll be doing that, and they've actually written a report for us on their product on our site, which is really good. So that's good. Few new technology things which are all improvements, which is always great because you've got an old plant and you're improving it, so that's good. No, not. I mean, current market conditions are really probably the most difficult thing, like the freight and the labour issue and any COVID restrictions that we get. That's probably the biggest issue. But then again, I love construction. We love construction, so we like the challenges of it. So we sort of probably play it down a bit because it's what we do. And then producing, like, that's great. Like, blowing up rock and digging pits and dropping
trucks.
Yeah, dropping copper plate. It's really, if you like all the toys, it's a place to be, isn't it? And to see a lump of copper plate drop on the deck when you've produced it, it's just fantastic. I can sit there all day and watch it. It's fantastic.
I mean, I guess the question as you speak is, would there be any environmental issues, or those boxes that have been ticked?
We're actually improving the environmental.
Okay.
Would you believe? Yeah. So Nifty, in terms of its environmental, probably hasn't been handled very well. And in fact, there's some misinformation around the type of material that's there. So there's acid producing material which generally goes on the heap leach, and we extract the copper from, and the acid goes out of it as well. But generally the carbonate's actually an acid consumer. And when you have a look at the tails dam and the waste dumps, there's very few areas. There's one area where we've seen off a ROM pad where there's a bit of acid issue, but it's off a ROM pad where the sulphide's been stored by the looks of it to us. But on the rest, there is no AMD at all over 20, 30 years, and that's because it's benign. And what we're seeing is if the acid levels start to rise from any point, the carbonates actually absorb the acid. They actually acid consume, which is always the problem with the metallurgy at Nifty, is the acid consumption. And we're seeing basically benign material that's in fact alkaline. And funnily enough, the byproduct of that acid-alkali reaction is magnesium sulfate, which is fertiliser.
Oh, okay.
Yeah, which is like gypsum salts.
Oh.
That's what do you call them when you put them in your bath? Epsom salts.
Epsom salts.
Yeah, which is like a fertiliser.
Oh, okay.
Yeah, so you get gypsum and Epsom. They might be the same, I don't know. Anyway, I'm getting my chemistry mixed up. But anyway, yeah, so you actually get this benefit. And you see on the dumps themselves that they have, where it's grown, they have this very, very thin layer of the sand soil and this great growth into the rock and that. And there's an opportunity for us, and what we've done is we've designed it for closure, as you do these days, and we've graded everything back towards the pit as the water source, water catchment, and we can progressively rehabilitate it. Because when you go there now, there's not a lot of that sort of work's been done, and we actually can do something positive and progressive with the rehabilitation of this site. And we want it to be like that because we want to do Maroochydore and we want to do Murchison. And if we don't do a good job at Nifty, then people quite rightly will probably say, well, hang on, you haven't done the right thing here. Why are you going to do the right thing there? So we actually want to do the right thing. And again, we're not producing a concentrate. We're not using a tails dam at the moment. We're not sending concentrate off to a smelter somewhere else that's cooking it. And we're producing copper metal plate on site, which is the final finished product. So I think at the moment there's like 4.7% of the copper in Australia is produced from plate, into plate. If we want to be safe from all the machinations of the world, we want to produce finished product. Copper plate's one of those things we need to produce so that we can produce copper tube, copper rod, electrical cable. If you don't have a smelter, you can't get concentrate and turned into copper, and we don't have smelters here. Okay. So yeah.
Look, I guess the process, I mean, I'm pretty convinced of the process. I guess there's always, in mining, as we all know, it's, that the catchphrase is it's a marathon, not a sprint, and all this kind of stuff. But, it's just a matter of process, and when the process happens. So from an investor point of view, again, I look at you guys, you're 70 million market cap, cash-wise, you're in a sector that's, loved. So getting the funding to do what you want to do is good. Project looks viable. So why are you at 70 million? What are your thoughts on why you guys are still sitting at 70 million and not a lot more? Because I've seen explorers at 50 million and you guys are, maybe 12 months, 18 months to copper plating, right?
Yeah, I think, and a few of the guys in the broking industry, obviously, who support our stock have said this to me, that If you have a look across the board at copper developers, that generally when the copper price has been going up in recent times, their value's been dropping off, and they reel off a list of names of companies like ourselves, which like all things has merit. Other than that, I don't know. We put out as good a copper intersections like we did the one we did today as anyone.
Yep.
Other companies put out a copper intersection like that and they go to 200, 300 million market cap on a copper intersection. We've put them out at Maroochydore, at Nifty and at Nifty today. No reaction in the share price. So we're getting no value for Maroochydore, no value for Nifty well, and we're getting this 70 million valuation for Nifty. Although some people tell me it's the other way around, all the values in Maroochydore and Nifty well, and we're getting nothing for Nifty. We're out there in the market. I mean, we've been a bit slow with some of the results of these studies and things, which I accept. But at each stage, at each step, we've done exactly what we said we would do. And other than that, I can't really sit there and keep looking at the screen. I've just got to get on with it, knowing that full well that we get finance, we build this thing, we produce copper metal plate, then the cash flow will demonstrate the value. And I know that's 18 months away, but that's how the market reacts sometimes. As you know, like you go along like this for a long, long time, and then all of a sudden the market will wake up and say, hang on a minute, these blokes are about to actually do what they said they're going to do, and then obviously your price takes off. But I don't know, I don't understand it. I mean, I'm not in the market, so maybe the people in the market understand it better than me.
I've seen some companies like this in the past where, they're sort of sleeping there, and then suddenly the next thing you know, look, oh geez, it's, and I it's good for people like us, who are shareholders and who wants to build a position, because I think if you accept the upside that's going to happen, I think it's a fantastic time, because that's when you can accumulate positions and things like that. So I guess that's a conversation for the crystal ball kind of thing. Anything could happen going forward. Yeah,
well, the last time we did it, we were in a company. We actually built the mine. We made like 58 million US NPAT in the first year of production, and then that's when the share price ran.
Yeah.
After we'd produced, because I think the market didn't believe we could produce.
Yeah, I think in many cases that statement is very true. Is that the market needs to see that. In general, I mean that yes, Barry talks well and all this is great, but until they see that thing happen, it's when they go, oh, it's going to happen, which is, I think, most of the time the case in this kind of business, I guess. Which is a good point to ask you this question. So there are shareholders and there are potential investors looking at this. In your words, how should they look at you? Or how do you think they should look at you without getting yourself in trouble with ASX and ASIC?
So one of the investment advisors who I spoke to this week, I thought put it quite succinctly. He said, in these boom times, there's like 20 copper companies in Australia who are going to try and become a producer. And he said invariably only 3 or 4 of them make it. The rest of them, they fail to make it, and then in the next boom they come up again. And he said, I've convinced myself that you're one of the 3 or 4 that are going to make it. And I think of all those things that we do and we say, I think that's the most important thing that we need to remember, is that we are going to produce copper metal plate, and we're going to do it within 18 months in the second half of next year. That's our strategy. That's what we want to achieve. All the rest of it that we've talked about why companies have higher valuations than us, is frippery. It's smoke and mirrors, and the only thing this company needs to do is to produce copper metal plate, a ton of copper metal plate, because when that jumps off the production line and you get the beautiful snapshot of all the crew who've gone to build it in front of it, that's when we've achieved our strategy, because that's when we start to make money. And when you make money, you don't need the market cap and the price and the market to do those things. You can pay off your debt, you can go and build your next project, you can do whatever you like, And I think that's the key for us. And for the previous company, that was the key as well. As soon as that production appeared, the market went, whoa, he's done it. Well, while they've done it, I shouldn't say he's done it, that's a bit egotistical, but while they've done it, you know. So that's what I think. I think if we just like stick to our strategy, we produce our copper metal plate, shareholders who get in now, the lucky people, because I can't, because I'm still in a blackout, they'll all be cheering and saying, told you so, and all those people that are less risk adverse will be buying higher price. And again, the market works like that. You know, like we understand the industry, we'll buy earlier, someone else will buy a bit later, someone else will buy a bit later, and when you're paying a dividend or you're making lots of cash, there's another investor who'll buy later as well. So, you know, I just think we just move through that and produce our copper metal plate.
Are there any peers? I mean, I'm not a market analyst, but I can't think of anyone who would be in your stage in the copper industry.
I think there's a few at our stage where they've put out like you know, they're putting out DFSs because they're new projects, you know, for bankability. The difference is they can't build in the same timeline. So those companies that are doing a new build, the sum of money obviously is much bigger. They're talking 400, 600, 800 million dollars.
Yep.
And they're also looking at a 3-4 year build. Some of them haven't got approvals even lodged. So in terms of ability to produce as quickly, I think we're a standout. But other than that, there's other companies that will get a project going of a similar size, but I think it'll be post 2023, it'll be 24, 25, that sort of timeline.
Okay.
Yeah.
Okay.
So.
We can't end without talking about the other projects, I guess. Maroochydore, the Murchison and the Patterson. The Patterson is the greater region of Nifty.
Yeah, the IGO joint venture. Yeah.
Can you just give us an estimate? Because look, Maroochydore, I know you mentioned it a couple of times today. There is a substantial resource there, and you do have a fair amount of copper sitting in the ground, and at decent grade, 0.92%, and I think that's indicated, and then 1.39 inferred. Can you just give us an update on what's happening there?
Yeah, so if I describe it as like the total strategy, so you look at Nifty, 25,000 tonne of copper, 20-year life. If you sit there with that life, and basically this phase one is like taking down some of that pre-strip in the high wall to get you down onto a pit floor, the optimisation of the life of mine is good to look at. Can we produce more tonnes of copper per annum? Which there is some opportunity to do so. So we look at that. So the growth at Nifty in terms of annualised. So then we go to Maroochydore, where the ore's 20 metres from the surface. There's no pit in the middle of it. It's 500,000 tonnes of copper. It's still open. Similar geology to Nifty. So the performance parameters from the oxide heap leach at Nifty might be transferable, which is why we've got to do a test in the second half of this year about it. We cure the metallurgy, we solve the metallurgy, then potentially we've got 30, 40, 50,000 tonnes of copper per annum from a project there. And you think it's 500,000 tonne now, so 50,000 tonnes a year is 10 years already without drilling any more holes, and we've drilled more holes. So then we take that mentality down to Murchison and Nardi Well. The whole key behind Murchison and Nardi Well was to get Holland Air, which is high grade, very sulfidic, so an acid producer. We take it to Nardi Well in a heap and we use that for acid production, and we treat the green rock at Nardi Well. Again, the Holland Air resource is finite, but there's enough acid producing material there to produce acid for the whole of the Nardi Well mine life, which a lot of people don't know because we sort of play this close to our chest. But the ore bodies...
They do know now.
Yeah, they know now. We 750 metres long, 100 wide, 300 deep, not drilled out. Could be a similar size to all the others. So then that potential exists there to be 25, 30, 40, 50,000 tonnes. So now there's three of them. And then we've got IGO on all the other tenements in the Patterson spending 32 million over 6 years to earn an interest, as we discussed earlier. So they can earn an interest, not have an interest, they earn an interest after that spend. So, and again, there's no recognition in the market of that. You know, if IGO bore a hole tomorrow and hit another Nifty, there's number 4. Because we've got the metallurgy, we've got the operational experience. We're the ones if you find a Nifty tomorrow, we're the ones that can build it and operate it and run it for the next, well, because that would be 700 plus 700, so for the next 40 years, as an example, we're the ones that can operate and run it, and we've got the expertise. So, you know, we could have 4 projects. And, you know, our total production profile, we were targeting 80 to 100,000 tonne as a mid-tier company of copper plate. You know, our profile could be above that. If it was 100, I'd be wrapped anyway, because that's a pretty substantial copper company. And that's been our aim and our vision and our dream, if you like, is to get to that. And here we are, 3-year anniversary, the middle of this year. We've got 3 big projects that are putting us in right in that space, and then a big brother drilling the rest of our tenements to help us along that path. So that, I mean, that's Cyprium. And that's what we're going to do. That's what we're going to achieve. Nifty's just first cab off the rank. We'll achieve that first.
Yeah, I think that's the exciting part for shareholders, is that, you know, being involved in something that can happen so quickly. You know, I was going to end with a question for you to say to the shareholder or the guys out there, to say, you know, why you should be buying Cyprium, but I think you've covered in that last statement, and I think we'll just be repeating ourselves for the 3rd time, I think. Look, Barry, thank you for your time. This has been good. I've been a long time. I think a while since you last spoke. I think. I think it's a good time. It sort of like sets the base of what to expect coming up. I mean, I guess, you know, the timeline of what's going forward for guys. Can you quickly let us know what that would be?
Oh, well, the thing we haven't touched on is all the environmental approvals have been submitted.
Oh, yeah.
We forgot that bit. So, yeah, so just on the environmental approvals, so the works approvals in, clearing permits are in, mining proposal, closure plans, mine plan, water licence, all amendments, they're in. And expectations are we should be able to turn dirt 1st of July, which matches the finance. The only one left is a state development proposal, but that has to wait for the environment anyway, so we'll submit that shortly, but it's going to sit there and wait for the environmental proposals to be accepted anyway. But we'll submit that, and then all the environmental approvals are in and done, and we're waiting on a timeline, so that's good. So next steps, finance is into the data room, get some final term sheets, do the finance, have a look at what the finance numbers are and how that looks, do the drawdown, and then bang into construction as hard as we can, as quick as we can, and look to be commissioning first half of next year, second half of next year, full production. So that's half 2 of 2023.
Oh, wow.
So
okay.
quick, lightning quick. On the sidelines in the interim, optimising obviously that 20 plus year in the same time. We've got Maroochydore metallurgy to do, so some good stuff from that. The chalcopyrite metallurgy at Nifty, still got Nanati well core to do on the metallurgy for that. And then there's some other metallurgical things, some other test work that we're doing that we think is pretty exciting, but we don't want to talk about at the moment. We're in a patenting process at the moment, so we're not giving any detail. And then start to accelerate to look at Maroochydore in terms of, we need to obviously get our traditional owners out there, need to do with them helping us with the environmental stuff, doing all the approvals for that, all the design work, solving the metallurgy, so doing some more resource drill out, and then the same at Nanati Well, doing those sorts of things with the people, the stakeholders, if you like, getting that all lined up to how we're going to do it. So, which is a lot of work in its own right, because there's a long lead up, because they're new projects, there's long lead up. So, we've got a lot of work to do with our stakeholders on those other 2 projects. But we do what we normally do, and we just involve them all, because they're our landowner, and the environmentalists about we don't want to harm the environment and all those sorts of things. So we'll just get everyone involved and just slowly but surely step our way forward together. So lots going on.
Oh, Jesus. I think people will need to download and record this, and it's just a lot of information. I guess it is what it is, and I sense that with the studies that it's all go, and it's a matter of what comes before, and that lining of the ducks, I guess. Would that be a fair narrative?
Yeah. So being in the resource industry, you understand better than anyone that you actually can't shortcut anything in the resource industry. You can't start working 25 places at once. So one step at a time, like you suddenly can't appear in the bottom of an ore body. You've got to dig your way down or drill your way down. As you know, you've got to step out.
Yeah.
The whole part of our sector's like that. So all we're doing is step by step moving forward. What else are we doing?
And the further you go, the least margin for error.
Yeah, risk.
You don't want to end up somewhere and go, oh geez, I thought it was here.
Every step of the way is a reduction of risk. That's all it is.
Yeah.
No, you're right. It's just a reduction of risk, and it is step by step. And like all our crew and that, like thanks to our crew, they work through Christmas and all that to do this. Right? Everyone worked big long hours to achieve this and deliver it, and they're now on to the next phase doing the same thing. So it takes a lot of effort for all these step-by-step things to be done. So everyone's working through it at the moment. So it's good. And now that we're past this restart phase, what we'll be able to do is probably to do a few more of these just on particular subjects. Like we started out last year just trying to deal with particular subjects that people aren't quite sure of. If they're communicating to you, we can sit and do a session on a particular subject. I'm happy to do that. But I had to get the study out so that everything's out in the market, and then I can talk about it.
No, I get that. Yep. Look, I want to close this off, but Barry, it's a fantastic conversation as always, and I just want to say that we've teamed up with Florence Drummond from the Indigenous Women in Mining Resource Australia, and they've come up with a packet of coffee for guests of
Fantastic.
Coffee with Samso, and these are your parting gift.
Excellent, thank you, that's great.
And happy drinking, and till next time.
Yeah, thanks very much.
Thank you.
Appreciate it.